Well, it's official. The housing market in Orange County is in a seller's market yet again, with the average days on market being around 30, which has actually dropped from 38 a couple months ago. And if you've been following along for the last few months, you'll know that I've been saying more buyers are entering the market. Homes, if they are priced right, are still getting multiple offers over list price within the first week. And homes that need a little bit of work, where the sellers are too ambitious, they are still not selling. We're continuing to see the trend of bad house flips, investors who are way too ambitious with where the market is headed, still not selling. But those homes that are priced right, marketed well, listed accurately, they are selling. Now, the median sales price, we are officially at a new all-time high. Housing market in Orange County went to about $1.2 million last year, and we had a cooling off period in the second half of 2024, and now we are 1,215,000. So prices just hit a new all-time high, and we are also seeing inventory increase. So that could be good news for buyers if you're in the market, kind of circling around, waiting for a deal to happen. Homes that are on the market for over 30 days, they're too expensive. With my buyers, we're writing around 3% below list price and hoping to get a counter, starting the negotiations. Some homes, we can write 5% below list price and start negotiating back and forth. Interestingly, when you compare Orange County to California, the overall market in California kind of topped around 2022, right around when rates started to increase pretty drastically, where they went from 2.5% all the way to 7%. And the market right now in California is still right around that same level, but Orange County, although it did have a pretty substantial correction in the second half of 2022, it just carried on going up and blew past that 2022 high. And then when you look at Los Angeles, it is still below the 2022 market high. So there's a lot of homes on the market that were purchased in 2022, and they're actually selling for less than what those homeowners bought them for in certain parts of LA. If you're new here, my name is Iain Phillips. I am a local realtor in Orange County, and I like to talk about what's going on in the market. I deep dive into the data and let you know in real time, as I am very active in the market, what I am seeing firsthand. Let's get on with the video. Now, as far as comparing those two markets, obviously very different. There are huge amounts of neighborhoods in Los Angeles where it's still a seller's market, still getting multiple offers, but other areas where it's very, very slow. Obviously, the fires had a pretty substantial impact, and a couple months ago, I published a video saying, in my opinion, the market in Orange County was going to skyrocket because of these fires. Yes, there were a lot of homes lost, which could affect inventory. However, from a buyer's perspective, would you really want to be buying in an area that just had the most devastating wildfire in California's history? Probably not. So I think for a lot of those homeowners, they just said, you know what, I'm just going to restart in a new area, and Orange County is one of the better options to do that. So what am I expecting for the rest of the year? Well, I don't think we're going to have 10, 15, 20% appreciation for the next few years. I don't think that is going to happen. I think we are moving more toward a normal, neutral market. Last year, we ended the year up around 3.5%. That is kind of my expectation for this year. I wouldn't be surprised if we continued increasing, continue to have a lot more buyer demand leading up to summer like we normally do, and then more of a cooling off period in the second half of 2025. Now, it's going to be interesting to see what happens with mortgage rates as the economy seems to be slowing down a little bit. If the unemployment rate can continue to increase, get above 4.5%, closer to 5%, we might have mortgage rates below 6% within the next 3 to 5 months. Now, whether or not that is going to have a buyer frenzy in the market again, I'm not too convinced. I think the primary factor is going to be unemployment rate, and if we get a surge in layoffs, that will likely reduce the amount of buyers that we're seeing in most markets. I do, however, think areas like Orange County, like coastal markets, where the top 10% of earners are moving to, are going to outperform most of the country. We've seen a record amount of insiders selling their stocks and moving to cash. And if you pull up a chart of the top 10% of earners, they're sitting on a record amount of cash. And we just saw earlier today news out of the Manhattan real estate market where sales surged by 56% in the luxury area. And keep in mind, that is one of the most expensive markets in the entire world. And who can live there? Only the top 10%. And that is what I think is going to be more of a trend later this year, where the bottom 90% are going to not be able to afford the desirable markets, and the top 10% are continuously buying those homes up. We're seeing it in certain areas of Orange County, Newport Coast, for example, where the median sales price is like $4 million. Homes are still selling over there. I showed a buyer a house and it got multiple offers over list price. And areas where the sellers are overpricing their home a little bit, Laguna Beach, for example, we've been seeing a few homes with some of my clients that are actually selling for less than what they were purchased in 2022. And in my opinion, areas like that are a great opportunity to pay attention to. Now, if you are not a top 10% earner and you are a lower down payment purchaser, I just would not be overextending yourself in this market. If you're doing 3.5, 5, 10% down, I would just make sure that you are comfortable with that monthly payment, and if anything were to happen, that you would still be able to afford that home. I am not convinced that we are going to be surging to new all-time highs for the next 3 to 4 years. I think the economy is likely going to be slowing down, and I just wouldn't want you to be in a situation where you can't afford your house anymore. So if you're buying a home right now, make sure you can afford it. Don't rely on a refinance opportunity, because we've seen the people over the last 2 to 3 years who have been buying homes, they've been relying on an opportunity to refinance, and it just hasn't come. And in my opinion, we will have lower mortgage rates, but I wouldn't want you relying on that. But in my opinion, Orange County, you cannot go wrong with it. I think over the next 3 months, we're going to see more of these homeowners who lost their house in LA realize it's going to take a decade to rebuild because there's just a lack of contractors available. City permits are going to be a nightmare, and they're just going to say, you know what, I don't want to live here anymore. And in my opinion, Orange County is the next destination for them. So that's it for the April Orange County market update. We'll have to see how the rest of the year plays out. I still firmly believe that if you are a home buyer, I wouldn't be getting yourself into multiple offers over list price. I think just keep an eye out for those deals. If there's a home that you like that's been sitting on the market for 30, 40, 50 days, get your agent to write an offer below list price, 5% below list price. See how the seller responds, because there are a few sellers out there that are pretty desperate. As I mentioned, I've been seeing some homes in the coastal cities that are on sale for less than what they were purchased in 2022. And if you are a home seller, the market, if you price your home right, is still pretty advantageous for you, as long as you are not too ambitious with your list price. And once again, my name is Iain Phillips. If you're looking to buy or sell in the area, reach out. I'd love to chat. Maybe I'd be a good fit for you. If you have any questions about city-specific areas, drop them in the comments below and subscribe for more.